All right, welcome back to the Protect the Pile, the no-nonsense investment show where we cut through the market noise with a panel of seasoned practitioners who play the game every single day. We will dissect the current landscape, debate the opportunities and risks, and help you navigate the markets using the Hedgeye risk framework and lots of real-world experience, all focused on one goal, helping you protect and grow the pile. I am Patrick Kent, or RPK, of Hedgeye Asset Management, and with me, as always, 3 times in, is Sam Rahman, portfolio manager and colleague at Hedgeye Asset Management. Hey, Sam.
Morning, Patrick.
In addition, we have a guest joining the round table today, Fernando, Valle, Hedgeye's energy analyst extraordinaire. How you doing, Fernando?
I'm well. How are you, RPK?
I am well. I am well. All right, I'm just going to do a little level setting, get the discussion going, and we'll chat for a bit and then get into the news. So it's Friday, December 5th. The S&P 500 is at 68.76 or so as we start the recording. Equities have staged a nice comeback over the last 10 days, kind of moving back to bullish trade and trend. Risk range on the S&P 500 kind of now signaling a potential new all-time high. We'll see. VIX measure volatilities back in the investable bucket. Something that might surprise the growth investor on the webcast. The value as a factor exposure has actually been standing out recently across large, mid, and small caps. Breakouts and names like Bristol Myers, I think the other day jumped up, Nucor. Seen Bitcoin coin maybe starting to show potential signs of bottoming on the recent dollar weakness. Dollar's been losing signal strength, breaking trade. That's improving global dollar liquidity and reducing some of the strains that we've seen in the overnight lending markets between banks. So now improving spreads, lower volatility, seems right on target for the move from maybe a quad 4 to quad 1, inflation accelerating, growth accelerating, which has historically been pretty positive for the markets. Sam, you got any thoughts on all this?
Yeah, I mean, quad one's always a tricky one for investors to navigate because you have to think a lot more broadly about what you're going to invest in. It's beyond what your comfort zone in terms of sort of stable growth stocks and stocks that would have done well for you in the prior cycle. You know, broadening out, you're looking for accelerating growth, and that brings in a whole group of stocks that worked for you by avoiding them in the prior cycle. And now we're kind of moving into a different sort of framework. So I think that's one of the things that I think with the strategies that I'm working on is combining both the focus on secular growth as well as rate of change growth, which can be cyclical as well, but it also can be secular if it's a structural shift on a model. But so yeah, you got to be open-minded about the kind of stocks you look at getting into a quad one world.
Yeah, it seems to be like a lot of things are changing, right? We've seen, I was just kind of looking this up as you were chatting. I mean, looking at some of what's gone on in consumer discretionary, right? Over the last, it's been a kind of bearish, right? And now we're seeing sort of, it's kind of breaking. I think I had numbers like something like maybe 61% of the names in the consumer discretionary XLY were going bullish trade. So it's like there's definitely, and you can see it because like some of the things that have been shorted or that are really popping out in the market, and that's sort of anticipating, I think, maybe that improvement in the first quarter, especially around potential for the consumer to get with the Fed cutting, obviously, but then on top of that, you get maybe a tax refund to consumers that might actually set them up for better compares next year. Does that resonate?
Yeah, definitely. I think all those things. I mean, consumer discretionary is one of the best sectors in a quad one environment, and I think all these macro factors that were drags this year are going to be tailwinds next year. So that rate of change aspect for that particular sector is pretty compelling. And I mean, even today we had Ulta Beauty and Victoria's Secrets, which are two names are reported today, and we were talking about it on the call. They were big on earnings that were much better than expected. So there's going to be a chase in a sector that people have done well not owning that much of in 2025, where in 26 it's going to be a very different environment.
Right. I mean, it's interesting. It's been a kind of a mixed bag, right? Recently, I mean, some of like the Mag 7, right, where you've had some of the stocks still look pretty good. Others are kind of weaker, I mean, certainly, it came up on the call yesterday. I thought was kind of interesting that this, sort of the weakness in Microsoft. You've seen weakness. Obviously, Oracle's been kind of weak on the debt issuance that they're doing, and all the Core Reef after it's all has been down, not in the Mag 7 obviously, but just as it relates to the following. He shall not he'll not be named OpenAI, because they all are kind of connected to that, and I wonder if that's maybe what's going on, is knowing that OpenAI's got huge obligations out there in terms of what they've said they're going to spend, and certainly trying to keep up with the spending at Google, at at the Amazon spending now too. You got Meta obviously accelerating into this. So I just feel like it's like it sort of says like all the people who are supporting OpenAI, right? With either it's NVIDIA, or that all seem to be kind of the market sort of saying you're gonna have to put up to support this, right? They're either they're either gonna have to let it go or they're gonna support it. I don't think they would let it go. So basically, it becomes an opportunity but a burden to maybe sort of like Oracle, Microsoft. I don't know. What do you think?
Yeah, I mean, I think, I mean, I was talking about this with Keith last week. I think we're kind of moving on from phase one and this whole AI theme where everything works and you can buy everything, to phase two, where I think investors really looking at carefully at who's got staying power, who's got the model to
Right.
last um, through the next few years. Where spending is clear. I mean, nobody denies it, but then you have to be able to monetize that, and you have to have the cash flow to be able to stay in the race. And I think you see the market break up these two, as you described, into two baskets. You got the Gemini basket and you got the Chat GPT basket,
Yeah.
and that
And you could
divergence
even
in
and you
performance.
could even throw sort of the Gemini Anthropic, like that kind of crew together maybe.
Right, right.
Because Anthropic might be the first one out the door. That sounds like they're prepping for a
Yeah, I think they're very
IPO and they're
smart
trying to
being the
beat
first.
OpenAI.
Yeah,
That
I think they're very
definitely
smart to be
smart
the
move.
first
Right.
to come out an IPO before OpenAI, because they put the marker on the board.
Yeah.
And they legitimately have a model that they're monetizing faster than OpenAI because they've focused just on the business opportunity.
Right.
So
Right.
I think they're doing the smart thing. But this dispersion could continue. I think, long term, I think each of these models, they're generically the same. I mean, I think Gemini is good right now, but I'm sure ChatGPT will come out with an update that will match Gemini. So I think that's the big structural thing, is that these models are all ultimately going to be commoditized.
Right.
There's only like three or four are going to survive because just by sheer scale, that there'll be survivors, and nobody else will be able to compete just because scale becomes the competitive moat in and of itself.
That's kind of
I
important
mean,
what you just said there, though, right? Because if you say like these become interchangeable, it's like,
yeah,
and we're already seeing like the horse race reporting on these models. Like, oh, this release is slightly better than that one. Oh, nope, they got the position back. And looking at the scale of spending around these, the hints we're getting of the dynamics of this business don't seem to point to like huge profit pools, right? Like,
right.
because it's if these are going to be interchangeable to some degree, and like it's like you're leveraging the cash flow in these existing almost monopolistic types of businesses that they've had on these platforms, and pouring every dollar of that and then every dollar of other people's money you can match that with into building out the capex to get into a business that's going to be kind of even more commoditized. Like, it's not going to be the platform monopolies that they've had in
Well,
history.
it's different. I mean, if you're just a pure infrastructure provider, that's going to be a low margin business.
Right.
But if you're a cloud provider like Amazon, Microsoft, and Google, they're providing infrastructure, but they're providing compute and software applications on top of that.
Right.
So, that's a different model than CoreWeave and Nebius. I think, yeah, I think those guys, I mean, you got a low margin business problem, and you got to keep feeding the beast in terms of infrastructure spend. So I think this dispersion continues, and the remaining three or four models, whatever they are going to be the ones that have the scale to continue to be competitive. and will have the skill also to be able to monetize that.
Well, and
Like,
it's interesting. It kind of says the shift, that quad one shift, right? Because especially what you brought up earlier, some of the things that might start to work in that environment, right? Because
yeah,
what would that mean? It means if spreads are coming back in, dollar liquidity is improving, these companies will get the financing done, right?
yeah,
If we're not in a risk off environment where they can't get the financing done, then they will get the financing done. I mean, in some ways, what triggered some of the volatility, I think, in October, right, was actually that you had dollar liquidity kind of declining, or not declining, but decelerating pretty dramatically throughout the month. And at the same time, the tech industry brought like $80 billion of debt to
right,
market at the same time, and like began to sort of push the spreads out a little bit. It just became, and then it woke everybody up to this like idea that, oh man, they have to borrow money to do this. And like it created sort of its own narrative with the spike in volatility and some of the sell off in the stocks. But you wonder if, like, as we move into next year, yeah, it's going to be really important to be thinking about the signaling of the different names here, because like whoever's kind of considered to be in a better position than others. I mean, Amazon's got pretty good comps. Like we got this, like the okay up against Microsoft has tough comps. They're going to probably have to pony up and pay more investment in AI, in open AI, if that's the way it's going to go. Like, but that means this stuff's going to get done, which actually takes us to the next possible thing. I was actually on X talking about the other day. I was tweeting out like sort of my deep thought, which was just that it'll be interesting when the market starts to really wake up to the fact that we're pouring tons of capital into these things that need lots of basic materials. And we haven't been putting any capital into basic materials, really. I mean, like
right,
there hasn't been, a new copper mine brought on anytime recently, right? And so in fact, the biggest one in the world's been shut down by force majeure for like the last year almost, right? That Freeport has. And so
right,
that's taken a lot of the stocks and inventory down. And so we're going to be spending on data centers, which are like, even AI data centers are like 2x the copper demand that other ones. I'm just sort of like, wow, this is kind of an interesting setup here where the things they're going to need are actually going into a quad one environment could be kind of interesting. Um, but then maybe that brings us. I was gonna talk about the Netflix one of this thing, but let's come back to that one because I actually think I'm gonna take it out of order and drive Eric crazy. But we'll move to. I think this is a good time to bring Fernando in and get talking about this, because obviously this is massive amounts of grid demand that is going to continue to be ramping up in a grid that we've underinvested in and hasn't actually seen. I mean, there are people who, have you ever thought about it this way, Fernando? There are people who work in the utility industry in their 40s who have never seen load growth. Like think about that. And so like just the idea of like having to now bring all this on, work through it. We're seeing obviously the orders and things that are out there for the equipment, to invest in the grid, and what that's going to start to mean for like ding 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 natural gas demand, which I know you've been pretty bullish on. I'll maybe put the quarter in the machine and let you go now.
I mean, you're speaking to one of them, right? I did a presentation recently about how we haven't seen load growth in 17 years, and I've been in energy for 15. So um, I haven't seen load growth in my career in energy. And I mean, obviously in the US, I have seen it in Brazil in a different way. And I think it's very interesting to think of what's happening in the next 10 years because go back to any of these big gold rushes, including the original gold rush. And the guys that made a lot of money were the guys selling the picks and shovels, and less so the guys actually prospecting for gold. Some of them made it big, but not all of them did. And as you're speaking about this move, it reminded me of all the search engines and that those wars for search engines. That I remember Alta Vista and Ask Jeeves and Yahoo and all these
Ask
other.
Jeeves. Wow. That's going back.
I'm older than I look. And so and ultimately we all just converged on Google, and so it's hard to pick who's going to be that winner. But you know that there was a huge build out in fiber, in telecom, all of those. AT&T and Verizon are much larger companies today than they would have been without the advent of the internet because of this huge consolidation. And as you mentioned, there's been a whole lack and that's an oxymoron, but a lack of investment in particularly the grid. But
Mhm.
we can also talk about just natural gas infrastructure over the past several years. That's now seeming to take some changes. And I'm very curious to see the next 10 years. We're going to be talking about a baseline of natural gas is significantly higher than it has been over the past couple of years, much more in line with the early 2000s than what we've seen over the past 10 years.
So when I think of the structural demand, obviously there's kind of two elements to it, right? There's the LNG export capacity that will kind of come on over the next few years and see a convergence maybe between a little bit between the international price and our and the domestic price. But then also this increased, power demand that kind of sets up at the same time as all of this comes on. I guess I'm kind of curious, how much is this move recently, like which natural gas has obviously gone, bullish trend. It's broken out. I think it was up over five today. Henry Hub's like up over five, I think today. How much of that is just it's like 7 degrees outside in my house right now? Um, there's always that weather trade. I remember my first job, like I worked with that energy analyst who was very good, and he sat next to my office, and he used to always like come in and be like, "Oh, first cold day, like natural gas gonna be up." He's like, when the traders in New York get off the train and it's cold, the natural gas goes up. Now obviously, Biggie's being facetious doesn't really not probably doesn't really trade on that, but it does trade on heating and cooling days, obviously.
Yeah, I think there's definitely an element of that in the price today. And I'll couch it in two different thoughts. The first is my call is not that we're going to make new higher highs on natural gas. We're a long way from that. If you adjust for inflation, 2006, we're $14 an MBTU on Henry Hub. So
Oh wow, I hadn't done that. I hadn't looked at that math. That's wild. Okay.
yeah, 1440 to be exact, versus 525 we got to today.
And
So
what's
long way
LNG
from
landed in Europe now by
um
comparison to that?
with the 520, probably in the nines.
Yeah, okay.
But mostly there's a factor of demand price there. I mean, because TTF is actually relatively low.
Yeah.
Um, so my call is we're going to set a new baseline that's higher. And that was the call last year when Henry Hub was a buck 80, a buck 70. And I said, look, I hate playing the weather, but at a buck 80, like whenever it's under two, like there's a lot more room up than down because
Yeah.
you're below cash costs at that point. Um, so the way I look at it is we're essentially setting a new baseline higher, and it's not that we don't have enough supply to meet that demand. We do. There's massive natural gas reserves in the US, but the price that it takes to turn on the next molecule is higher. So it's a term for power that I'm going to borrow for natural gas, but the last marginal natural gas molecule is getting more expensive. And so the baseline price needs to get more expensive. And the most obvious way to show that is at the Haynesville, Comstock, the Jerry Jones company, ticker CRK, that stock is up significantly because the Haynesville um, turns on at around 260, 275. And
Well, yeah, I
so,
mean, you pitched me on the pitch we did like a couple weeks ago, right? Your
yep,
pitch was BKV, right?
yep,
That was not that's one we went through, right? It was
yep. That,
and that's, hasn't been a slouch either for
no. CRK has really outpaced it because it's the next one up and he has a lot more financial leverage. Um, Jerry runs thing a little bit more wild on the leverage side than BKV does. But the Barnett, which is where BKV is actually the next play up after the Haynesville. So that's part of my call is that at three, you really you essentially have what I think I said this on the pitch, but you have the best trade that you always get, which is when something's worth zero and then it's worth something, because that's an infinite return.
right, right,
And you
right.
get a ton of inventory that is worthless at 280, but it's worth something at three. it's worth a whole lot more at 350. And that's
Yeah,
what
so
we
well,
did.
you've had some other ones you've highlighted, I think, right? Like Antero and Range Resources, kind of same thing, right? Antero
Yeah,
hasn't actually had their dry gas production really on. They've been almost entirely just liquids, right? For
exactly.
the last couple of years. So that's a whole incremental thing that comes on if gas really is up at that high, right?
Yeah, and if you want to go even safer, you can go with the basics like EQT, which is pure dry gas. So it has more torque to just spot prices. And
Mm,
it has that whole, Mike Green aspect of big companies get the incremental dollar because of passive. You have Expand, which is EXE, former Chesapeake, you probably know, which is it is to range. It is to EQT what AR is to range. It's more levered. It has slightly higher cost acreage that turns on more. So you get even more
yeah, you get
torque
the
to the
torque.
upside. Yeah.
It's a yeah, little convexity or however you want to put it. It's interesting. I don't know. Any Sam, any thoughts or questions on the nat gas side?
Yeah, like I agree with Fernando completely. I think I was just chatting with him before we started. I was at a conference down in New York that was focused on how power is going to be supplied to this whole AI investment boom. And there was companies there from pipeline companies to generator companies to utilities and so on. And the big takeaway phrase from that conference was time to power, because these data centers that are coming online, they need power right now. And they're not questioning whether it's the lowest cost power that's available, because these, as Fernando knows, these H-class turbines that
Right.
have massive backlogs, they're not going to, the first one isn't going to come online for another 3, 4 years. So these data centers are putting up any and all combinations of reciprocal generators and engines and smaller
I don't know if you saw. Did you see
turbines.
that
And
Chris Wright was in the press like yesterday or it
yeah, I
was
mean, you look at
Wednesday,
Liberty's, look
basically
at
saying like
Liberty's
might need
stock
to just be
price.
using diesel generators to make all this
Right.
work. I guess like
Yeah,
wow,
regardless of the
talk
cost. I
about a
mean,
stopgap. That's
right. So you got that, you got CATS engines, you got solar and batteries. I mean, there are a couple of battery companies there, and they're like booked out that they can't make this stuff fast enough
I don't know,
because,
man. You and I live in Massachusetts. Have you looked at what our power prices are on the
yeah, don't
rankings of
ask.
US 50?
Yeah. I mean, we might as well be in northern Germany.
I started actually doing the math the other day. I have solar panels on the roof of the house. It doesn't do a ton, but it does like in the summer it takes some of the air
Right.
conditioning bill off, right? Like but I
What
was
it
trying to
does
do
is
the
that you get
math
a
on
subsidy from your neighbors because
yeah,
the state pays you a ton, and then your neighbor's bill gets more expensive on all the
Right.
backup and all of that, and your bill gets a little cheaper.
yeah, we'll cut that part out in case my neighbors are in case our neighbors are listening to this. No, but what I thought was funny, I almost started doing the math on like, what if I was just went off grid? Like, given what I'm paying for retail, like it's almost like, oh, I could just run a generator and be off the grid and probably end up break even.
Well, that's a
Anyway,
big part of the debate. I mean, like a lot of these guys that are talking about installing this power, this issue of behind the meter, front of the meter, and the impact to consumers is a really big issue. All these guys are really starting to plan for that. So a lot of these Bitcoin miners that are now converting to high performance compute sort of infrastructure companies are all building excess capacity and power behind the meter and off grid on site. So
right,
they have backup generators, backup batteries, so that if the grid goes down, they have uninterrupted power. But they're building a lot of sort of contingencies around the fact they're having power on site, so that they're not going to be in the crosshairs of regulators and politicians, because electricity prices are going through the roof because of data centers. So
yeah,
that's a really big thing.
oh yeah.
Yeah,
I mean, that's gonna be an election issue. That's a little off our
Yeah.
topics here, but I imagine this is gonna be big next year.
te
People are complaining about what's going on with it.
Texas passed a law that was in June of this year, essentially saying behind the meter, you can't take any power, the existing power out of the grid today. If you build brand new power generation, then that's okay. But if you're going to take existing power assets, it needs to be approved. And so folks are now talking about potentially building AI and data centers in the Permian because while
Right.
Henry Hub is
Just
522, Waha is 22 cents. It's a $5 an MBTU gap there.
right.
Obviously, your cooling costs go up significantly, but
Interesting. Yeah. I mean, just get it closer to the power where it's cheap, right? So, and there, I mean, yeah.
it's cheaper to move fiber than it is to move natural gas
Right.
or
Right.
electrons for that
Right.
matter.
Right. And coming back to what's the timing on the LNG capacity expansions? So when do we have the update on, so wasn't it supposed to be kind of this year and next year that you're actually starting to see the step up in export?
Yeah, I mean, you're already seeing some of it with Venture Global, Plaquemines growing to full capacity by year end. But Exxon's Golden Pass has been delayed, so that's going to be more next year. And then the big thing is it's not when the capacity is built because everyone looks at that as we add Golden Pass 2027, 30 million tons a year. It's like
Right.
great, but then it takes some time to ramp, commission all of these aspects. So you're not going to get all of that demand all at once. So it takes a little bit of time. But I think, one of the calls on natural gas, especially short-term call, is quad one. But then when you look at inventory levels, especially in Europe, and especially with the TTF price where it is,
Right.
gives you a lot of optionality if winter is normal, let alone cold. And as you said, 7 degrees outside in early December.
Yeah, a little cold snap. We already got some snow on the ground this week, so it's put you in the spirit the season.
You get a white Christmas this year.
Yeah, maybe we get them once in a while around here. That's all right. So well, let's pivot a little bit here and move to the oil price because I'd love to sort of chat through what's gone on and trying to unpack a little bit about what the stocks are telling us, right? Because if I look down the XLE, set roughly 75% of the companies in there, it's much more oily than it is gassy inside that inside the ETF. And if I like 75% of the names look like they're basically breaking the bullish trend for an ETF that's up 7% year to date, right? It's like this is just maybe just coming off the mat, like starting to trying to figure out what it's discounting exactly here, because it seems like everyone's waiting for some final washout in oil price, but it's kind of stubbornly hangs in there at like 63, 64 for Brent, right? Like, and obviously WTI is kind of around 60 or 58 to 60. I don't know, where are you at now? I know I got a little bit of this from you a couple of weeks ago when we chatted, but love to sort of update how you're thinking about it, and maybe for people who didn't catch the pitch, like talk about it a little bit more too.
Yeah. I think when I look, the fear was quad four in December. Now that seems to be a lot milder, and we're obviously quad one at the beginning of next year. I think you're correct. Like there's been this whole narrative about an oversupply, which is not really showing up necessarily in the physical market as much. Um, and if we get into a quad one, which is essentially, you have to differentiate some of the consumers because of that K-shaped recovery, but also primarily government, right? And that is Chinese government, European governments, US government stimulating in trying to, if there's a Fed cut, for example, all of that has a direct effect in the oil price and oil consumption. So we're in a scenario where we're teetering on being oversupplied, undersupplied. The narrative is we're way oversupplied, which is just not quite right.
Right,
Um, and if you look at the 80% of the consumers, you'd be super bearish oil. But if you look at the top 20%, you're like, oh, well, maybe there's some room here. And so
right,
as we look use the quad framework to lead us and look at potential stimuli in China and the US, and I'm saying that as both QE and a rate cut, I'm we're still on the short side on the oil E&Ps. And I think just tactically, as folks sell some of their losers here into year end, tax loss harvest. They weren't the pure oil E&Ps weren't great performers. I'm not dying to get long right away, but I'm monitoring them so that early next year we can pivot. And I think that's how
Yeah.
I'm couching this. I'm framing it as
No,
a
and
quad
it
one
seems
strategy.
like that fits with like what's kind of working, right? Like Exxon's been strong, like Chevron's been strong. Those are sort of like the defensive ones, value-y defensive ones with oil exposure, right? Like they're sort of like the creeping in, not like willing to go all in yet, right? Like or at least the market doesn't seem to be saying that. Um, but I guess a bigger thing I'd love to sort of unpack, and maybe for listeners or viewers who aren't already familiar with the Hedgeye terminology, we I'll try to remind myself to go over some of this. We'll throw the word quad around a lot. People who know the Hedgeye research obviously know it very well, but it's really just about whether growth and inflation are either accelerating or decelerating, and they're very different investment environments depending on what's going on. And we'll talk a lot in bearish and bullish trend, which is a lot of our own signaling process. And I'm actually probably going to try to write a piece on this at some point, but thinking about how quads are downstream from signals and themes are downstream from quads, right? So if we're like, signals seem to be pointing to recoveries in some of the energy side, if we then move into quad one, which would be positive for this backdrop, a positive backdrop in theory, right? And then, so that kind of brings me to themes. And on the theme side, I sort of like want to explore a little more about this, like the biggest thing that's been happening in like the oil markets for the last decade has obviously been, I mean, longer than a decade, but it's really impacted the market over the last decade with the onshore US, right? Becoming the switch at the margin. And I think the theme I'd love to hear you talk a bit about is like, where are we in that? And is this starting to shift back toward rest of world, like as on a secular basis over the next couple of years, right? Um, and because I looked at like the offshore drilling, right? That's been in a 10-year downturn because it's like once like 2014, 2015 hit, these things just hit the skids and never came back, right? And we've just warm stacked for a while, and then we just started cold stacking rigs, and now we're just scrapping a bunch of them. Like, so I'm curious where you are on that kind of mega theme within energy.
Yeah, I think it's an interesting thought, and there are a couple schools of thought that I subscribe to neither. But
It's good. You're an agnostic. You're not an orthodox believer in any of these. I get it.
yeah, which is one is that there's been massive underinvestment across the supply chain, which outside of shale, which there is, which is true, as you said, 10-year winter for offshore. But it's not totally a dearth either because you've had major discoveries in Guyana. There is enough oil in the US as well. We just need a higher price. And then you have other provinces like Vaca Muerta, you have Brazilian pre-salt. There's still discoveries there. You have things in Asia Minor as well that have potential, and obviously the Middle East. So there's oil to frame for a demand upswing. In order to get like this, you every once in a while you hear whenever oil makes it over $80, some sell side firm is saying, "Oh, this is when oil is going to go to 200." And I'm like, That's impossible. The amount of
Yeah,
demand
right.
destruction you'd get is
Right,
it never
right,
happens.
right. Yeah, I
So I
mean,
don't
even if it did, it
subscribe
would
to that.
like it stands there for about 5 minutes because it
Yeah.
would quickly come. Yeah, Uh, I mean,
So
the
to
cure for
get
high
this,
prices is high prices. Cure for low prices is low prices. It always feels like you just end up in a band of like there is a floor underneath which like yep we'll see. I mean, we're already seeing it in the U.S. right. The rig count, onshore oil rig count is like knifing lower, right? Because that even at this price, it just doesn't make sub 60. It just doesn't make a lot of sense to be starting up a lot of new wells.
and you'll see though, even if you again adjust for inflation, the 135, $136 of Brent in the mid 2000s, you're probably up to that $200, which is probably the math that they do.
Right.
But the change is the demand, right? You don't have a China reindustrializing using primarily oil. So that demand side of the equation is different today than it was 20 years ago when oil made its march from 20 to 130.
Yeah.
Um, So I don't see that playing out on the demand side. In fact, quite the opposite, right? I think that 80% of consumers becomes 90% of consumers, maybe 95% of consumers if oil goes above $110, right? Like that K becomes an I very quickly if oil goes up.
Right,
Um,
right, right.
and so I can't see that until there's a bit of a clearing up the deck on the other side of the equations. Because again, oil, natural gas, massively deflationary to the world economy over the past 15 years. Massively. Power too, for that
Yeah.
matter. Massively deflationary. Everything else, inflationary, energy, deflationary. So
Well, I mean, think about the narratives. I think it's sort of funny, the narratives that were pretty mainstream just like 5 years ago, right? That, I mean, we don't have to go back far. I mean, sometimes when I talk about stuff, it's like I'm talking about things that happened 20 years ago. I really age myself in these markets. But in this case, you only have to go back 5 years. It's an ancient time in these days. But to just when people said like power prices were going to zero because the incremental cost of adding solar panels, we were just going to, and batteries was going to, and the downward price was going to just drive everything to like low prices and the forever. That's kind of now just that narrative's died, right? Everyone's figured out that you can't put that much solar into the grid without massive problems and reinvestment and balancing and all the kind of things that would have to happen with that. And then that's before we even then said, oh, we're actually getting a little growth again. Oh boy. Um, and so I think that's like that. The other one was that, we're all going to drive electric cars and no one's going to need oil, and oil demand was going to peak in like, I think originally the estimate was 2025, right? Like it was in 2020, they were saying like 2025, oil demand will peak and never reach that level again. Now it's like they're talking about it peaking like, I think, yeah, he said 2050, right? Like they just upgraded that to, it's a big jump. We just moved it from 2025 to 2050. So it does say like, that is at least at the margin, some kind of change of view, right?
in 10 years is going to be 20 never and and so on. But I think the other big narrative is that you need for this super bullish cycle is that the Permian is going to roll over. And I've heard everything from we're producing too much water to we're running out of tier one inventory. And yeah, is the Permian producing a lot of water? Yes. The Permian produces about 5 times more water than it produces oil. But Colombia still produces oil and it produces 20 times more water than it produces oil. So
Yeah, I think that narrative's got to be like, it's sort of funny, right? You want to almost split the baby on the narrative. It's like the
yeah,
Permian's not dead. It's fine. Like it'll be continue. It's just that
it'll peak.
yeah, it's like it is what it is. Like it sort of peaked, and that's what we're gonna get now
Yeah,
for like it's no longer going to be a fast growing thing, which adds all this incremental supply to the market. It's just kind of is part of the base supply of the market.
exactly. So in order to get that kind of in order to get the kind of super cycle and offshore that a lot of folks want when they're buying rig or they're buying diamond offshore, whatever, like you're going to need demand growth, not demand stagnation, but demand growth because there is incremental supply. Guyana, as I mentioned, Vaca Muerta, as I mentioned, the Permian can turn on more at $50. I mean, the Scoop Stack can turn on at 65,
Right.
$70. So, um, in order for you to facilitate exploration, you need sustainably higher prices, 90 plus prices. And that's exploration is when you start to get that upcycle because the same rig that digs for exploratory wells is going to drill development wells. But when I'm doing a campaign in the Brazilian pre-salt, for example, I usually drill 5 to 8 exploration wells over a 3-year period. That's three wells a year. That's about half a rig, maybe a whole rig a year.
Right.
Um, when I develop the pre-salt, I I'm developing one field with 10 FPSOs. Each FPSO is connected to 15 wells. Each 15 producing wells have 2 to 3 injector wells next to it for water, sand, gas. So that's hundreds of wells. That's multiple drilling rigs just to support that development. I'm
Mm.
not going to get there until I have exploration. The
Hey,
only place we have exploration now is Guyana. And, you know, um, in Portuguese we say, uma andorinha não faz verão, which is one small bird doesn't mean that it's summer. You need a whole flock of them. So,
hey,
one small bird there doesn't make it summer for offshore rigs yet. It's going to be the last one to turn on. We talked about torque and natural gas, torque to oil. Every time it goes to 90, hell, like you can ride that wave up a lot, but is it a fundamentally safe wave? No, because if it's not
just related to
sustainable.
that, Fernando. So, obviously, to get to that point, you need to not only get to $90, but you also need to clear in the short to medium term, supply, storage, whatever, which is this nebulous question: how much oil is actually stored around the world, be it floating or in China or wherever it may be. So, like, what are your thoughts on like the potential clearing of that whatever floating captive storage? And the other thing that is a really tricky one to know, but with this administration, there's no, there's all the sacred cows have been killed. So what I mean is like Russia and Iranian supply, which we've all gotten used to for decades of being offline because they are the axis of evil or whatever it may be. Now, with this administration, we've learned that all those presumed sort of um, views are being destroyed. So, in a hypothetical world where there's an Iran deal with Trump and that supply comes on, or Ukraine Russia gets resolved, even like if it's a fake deal, but that Russian oil flows, like how do we think about that with regards to getting to that point where you can have demand actually driving price? Because there's a lot still to clear, I guess, real or perceived.
So I'm gonna go, like RPK said 20 years ago, but what drove that upcycle in commodities? Like what was behind that demand growth? It was Chinese industrialization. It was Chinese reserve building, as you said, Sam. Hard to say. Some folks say they have 1 billion barrels versus our 300 million, right? But a lot of it is underground. It's hard to, it's a hotly debated topic. Um, And so when you look at demand, what grows demand from here on out? Consumers, right? Like this is the paramount part that no one is talking about on the demand side of the equation because it's a lot easier to model supply. There are 300 to 400 projects at any point on supply side that's quantifiable, easy to model. So everyone likes to do a supply curve. No one likes to look at demand. But the demand side of the equation is hard to see where that growth is going to go. We've been growing, but slowly. We haven't seen this. We had essentially what happened to power in the US, the load growth in the US is happening to oil. And we're not in the first 5 years, we're probably near seven of that, of having very little growth. And I think it's again, you know, I sound like a broken note, but it's that K-shaped economy globally, not just in the US. It's a lack of new industrial development, right? We built everything out in China, and now they are struggling. Like how long ago was Evergrande starting to fall apart, right? That coincides with oil demand really slowing down. Obviously, COVID added
Right.
to that. So I think it sounds like a bit of a cop out, but I think to see real demand growth, you have to solve two issues. First is like the bottom 80%, they need to grow their demand considerably because ultimately oil is a baseline product. It's not a luxury good. So while we're talking about the US economy, global economy, depending on that top 20%, it's because a lot of it is higher cost goods. So on a GDP, a dollar is a dollar. But on energy consumption, a dollar is not a dollar. It's how many people are riding the train, how many people are going to work. So we need that 80% to come back to consuming. And then second, and this is perhaps the hardest thing to overcome, but demography sucks for everyone.
Yeah,
It's terrible for China. It's terrible for us. I mean, don't get me started on Europe. So,
Yeah, I mean, you still have like working age population growth in India. You've got other places where you could see, some, and I get what your point though. You're not going to see
yeah,
like what we saw out of China, the step function change in oil demand that was China, over the last 20 years is not going to be of the same magnitude
exactly.
in India. But it is going to be an upward pressure on that to some degree.
Yes, as long as we clear those decks and we let those bottom 80% grow their consumption of
Right.
oil.
Right. All right. That was good. Any other last questions or thoughts, Sam, before we pivot to the next topic?
no, this is great. There's so many areas you can go and talk about this, and we could be sitting here for 3 hours with Fernando just going through all the rabbit holes and power and
Oh man,
gas. So
do you know what's the best do you know, Fernando, what's the big energy conference now? Because I'm old enough to remember going to New Orleans for the Howard Wheel
Yeah.
conference.
Um,
I don't think they run that one anymore. It might not even be around anymore.
no, they stopped, guys. Scotia bought Howard Wheel, I believe.
Yeah. Even
Um,
after they bought it though, they kept doing the Howard Wheel conference for a while.
yeah.
Like it was still because it had the brand around that conference.
So the big ones, the industry ones, Serial Week, obviously in Houston. There used to be OTC, but that's with offshore being less, it's not as good. And then on the sell side, it's probably Barclays in September, and
Yeah,
then
I
Goldman
remember that one.
CEO in January.
There was still Simmons used to run one out in Las Vegas too. I was curious, like I don't know if they still do that or not.
City? Did you say City?
Simmons.
Oh, Simmons. Simmons,
Yeah.
I don't know as well. I was at City for 7 years. We did a nice MLP conference in Vegas that was huge because we're the biggest bankers in MLPs, but obviously that market is not as frothy as it once was.
All right. Awesome, Fernando. This has been great. I mean, stick around for the rest of the other stuff. We'll do some other quick segments here before we close out the show. But this was great to have you on to do the energy discussion. Sam and I have been wanting to have this for a couple weeks with you, so this is
yeah,
fantastic.
definitely.
Yeah, whatever
Um,
you guys want.
And so maybe I'll pivot. I'll hit you with the first of my. I do some quick hit thing topics, and sorry, I'm just hitting you with this without any forewarning. So that's good. You'll give me what's off the top of your head. I call it shiny objects. Yeah. So what something that caught your eye could be an energy, could be in anything else in the news, or something else that intrigued your attention. Got your investor antenna up. Any interesting news items to share?
I think the Google movements and have been very interesting to me with the Gemini part. We talked about this movement and I made the allusion um, to search engines, but I think mostly is that it's starting to become more and more uh, limited to those big groups. And because I try to look at it from an energy standpoint, as these guys continue to spend, like eh, I think every incremental data point where they say, "Hey, I got something better than you," they're like, "Well, let's keep spending then." And so the shiny object for me is that they continue to see progress. And to me, all that progress just means they're not going to cut the capex. So I have
Yeah.
a bet with Friedman that I think the tech to energy gap is going to be closed by AI because we're going to go up a lot.
Oh,
So
somebody, I can't remember where I read this, but he said AI is basically energy contemplating itself,
yeah.
which is probably a good way to think about the demand for. I mean, you're basically converting energy to pure information, right? And there's a endless demand for it. And I haven't really talked about it much on this show, and maybe we'll bring some of these concepts in a little bit as time goes on. But obviously, I talked a bit about biophysical economics. I actually that started the Biophysical Economics Institute with a group of people 5 years ago, like to explore like more of looking at energy's role in the economy, and because I think it gets very misunderstood, and that's one of the things that like it's interesting to see terms that we were talking about a lot, like 5, 6, 7 years ago. I was talking about Jevons paradox all the time. Now that gets just thrown around on like the All In podcast, or I turn into anything. So like, Elon, like, tweeting about, Jevons paradox. And I'm sort of like, wow, this is kind of funny that like it's finally come around that people sort of figured out, some of these concepts, and it's starting to become more obvious as time goes on that energy is what really drives things. And you get to the sort of that pure form of it once you move into just energy turned into pure information and knowledge. Um, I'll call that my shiny object. I won't rant any more than that. I'll keep it to a minimum. All right. Well, let's do some Q&A. We got a couple of questions in from people when I went fishing on Twitter or X. So we can address some of them. Anyone can jump in and take it if they want. Somebody, I think it was Mark Crone, sent guys, precisely define the bullish bearish trend term versus the trade and trend ranges. The terms get thrown around a lot, but never get very clearly defined. Well, they are clearly defined in some of the materials, if you can look around the website or depending on what you subscribe to. But I don't know if we can hear us talk about it, because we use this stuff all the time. Sam, I don't know, do you want to take that? Fernando, you want to weigh in? How do you think about telling somebody what trade and trend ranges are and how to think about these bearish and bullish trends?
Yeah, this is like so secret sauce that only Keith really knows. I mean, the trade and trend and tail lines are pretty self-explanatory. There are obviously levels for any given security where, there's the shortest term, level is a trade, and then you have trend and tail. I mean, it's, each of those levels, are proprietary to Keith's model, and the range is a proprietary Keith's model. So a lot of the times, the way I use those for my own purposes is really just is for each of the stocks that I own is really understanding, okay, where are they in those ranges? Are they still bullish trend or not? And, as Keith likes to say, the signal sort of always moves before the news. And so trying to understand like those incremental changes of signal are really important, because sometimes as you construct a portfolio, you can tilt and make adjustments accordingly to sort of position yourself, in favor of that, or to fade that, depending on what it is. So the specifics, the actual granularity, you should speak to Keith, but in
Yeah, I
terms
mean,
of how we
obviously,
use
yeah, he
it, that's
talks
how I
about
use it.
based in sort of like around some fractal math and Benoit Mandelbrot's work on fractals inside of financial markets and that type of thing. So that's certainly how it's the basis of it. I think I look at it as like you can always just kind of step back and characterize it the way a great technician I worked with years ago used to be good for pithy comments, and one of them he brought up in a room full of in a room full of fundamental investors, right? He was like, if you're trying to find stocks that outperform, why don't you start by looking at stocks that outperform?
Hmm.
And so you're like, and you're like, well, that there is some truth to that, and that's a little bit what the signal's kind of telling you, right? This says everything's probabilistic, right? The quads are probabilistic, signals probabilistic. There's no crystal ball, nothing's perfect, but it's giving you a potential that there are higher odds that it's going to trend positively, or higher odds that it might trend negatively if it's bearish or bullish trend, right? And understanding what's a structural move inside some of these ranges, that's asking sort of what's a real structural move, and sometimes what's just the day-to-day noise of the market, right? I don't know, Fernando, how do you kind of incorporate that? I mean, obviously you're doing deep research on your sector, and then when you get to the top, you just think about it in terms of or how do you use it in terms of what you're presenting for picks?
Yeah, so I typically go after what I find interesting, and where I kind of take the opposite way of that you said, RPK, that I start with a theme that I find that's interesting and that's topical for that time, and then I look for ways to express that. And then I look at the fundamentals of that. I look if it's going to do well in the next couple of quads, and then I ask Keith, where's the signal on this?
Right.
Um, it's hard sometimes to time because it takes a while to do the work on the fundamental to be like, this is something that I like and or not. And then
And then just
sometimes
hold
the
it
signal
back,
moves
right?
against
Yeah.
it.
Yeah. Well, because
So
it's the what, the why, and the when. And the
yeah,
when is kind of crucial, right? My another sort of pithy fundamental investor I worked with years ago. I collect a lot of these little aphorisms people had, but he's like, being early is the same as being wrong.
Yeah.
It's sort of like you get sit on the thing for a while. You're like, well, you could have done other stuff with the capital in the meantime.
So
Um,
I also think of the signal at times to try to understand, as I'm trying to put my framework about quad one now, I'm trying to use the signal to understand what's the mindset today. Why are certain things bullish trends and other bearish trend?
yeah, yeah,
And is that accelerating or decelerating? Because then I understand, like we were talking about the signal in the oil E&Ps, improving, rate of change again, improving, still bearish for a lot of them, some are now turning bullish. It's we get the sense that the market is waiting for something to get positive on oil. So
yeah. I mean, I've been
that's
doing some
something
work. This
that's
has been my little skunk works project. Has actually been using just to map the signals across sectors. And so, yeah, what I was referencing kind of earlier is it's interesting that there are, you know, as of right now in the energy space, is like about less than 50% of them are bullish tail, so long term, right? There, and then, but you got 85% of them bullish trade, and like 80% of them are closing in on 80% of them bullish trend now across the ETF, right? So that's interesting that that's just kind of like seem like there's this potentially an inflection going on there, which lines up a lot with what you're talking about.
yeah.
Cool. Maybe we'll do our usual little pop culture minute. I know Keith was talking about on the call yesterday, a show that he was watching on Amazon Prime that now I don't remember what the name was, so I'm gonna have to track it down. But my question for you guys was a series you either recommend because you've already watched it, or one that's been recommended to you that you want to watch. Um, I'll give you mine. I was talking. My friend of mine said I should watch Landman. I haven't really seen anything about it. It's kind of fitting for Fernando's here. I think it takes place in the energy patch. I haven't actually seen it yet, but I understand it's probably a pretty good one. So that'd be my pick. I don't know, Sam. What do you got? Anything you're watching or you just watched that you recommend to people?
Yeah, I've heard the same thing about Landman too, that it's really good. Another one that's on Apple TV, which I haven't seen yet, is called Pluribus. It's kind
Oh,
of like a quasi
that's
sci-fi.
the Better Call Saul guys, right? Like that
Yeah,
guy did that
it's his
Breaking
latest
Bad and
show
Better
on
Call
Apple
Saul. Yeah.
TV. So I don't know anything about it, but I've heard from a few people that it was really good. One that I'm watching, and I've seen all the seasons of it, so I'm kind of up to speed on it, is Stranger Things. I mean, I
Oh
love
yeah,
that.
yeah, well, yeah. We were doing that. So a lot of
Yeah,
my
I
watching
love
gets
that
done
sci-fi
on like a
stuff and that
treadmill while
kind
I'm
of
working out.
1980s reference stuff.
But my
So
daughter was all into Stranger Things, so
yeah, so
we were
that's
definitely
a
watching
fun
that.
watch with the kids. And if you've seen all the seasons of it, it's a lot of fun.
She was just binge watching the seasons again to catch up before the release of
Right.
the new one. So we were all very excited. How about you, Fernando? Anything? Got
So I'm gonna say, sadly, I haven't watched Landman yet. It's on my list, but we haven't had a ton of time. We're actually watching a series that is both entertaining and terrible in the same way called All Her Fault.
hmm.
It's with the actress from Succession. It's like a
Oh
crime
yeah, yeah,
drama.
yeah.
Actually, one of the actresses is from Stranger Things as well. And Dakota Fanning. I'm
Uh,
terrible with famous people, so I don't know any of their names.
no, I know. Well, yeah. Plus, I just start forgetting everything now. I'm like, oh yeah, that person from that show. I can't remember what their name was. But that's awesome. All right. Well, again, Fernando, thanks for coming on. Sam, as always, pleasure. Tune in for the next one, which I suspect will be maybe December 19th, I think. A little festive holiday episode ahead of Christmas. Maybe I'll wear a Santa hat. Uh, and boy, if natural prices keep moving higher, we'll all be asking for coal in the stocking.
Just,
So in the
I'm gonna
meantime,
ask everyone to turn up their heat a couple
yeah,
of
that's my
degrees.
that's my natural gas my combined cycle gas turbine dad joke is getting coal in your stocking. All right. In the meantime, you can follow me on Twitter or X. I always call it Twitter. I think he's now saying he's going to maybe turn the name back to Twitter, which would be great. At RP Kent, and Sam is at Sam of America. And actually, I don't know, Fernando, where are you? What's your?
I'm at Hedgeye Energy.
Well, that's an easy one to remember. At Hedgeye Energy. can do that. Excellent. You can see our bios, Sam and I, on the Hedgeye Asset Management website, hedgeyeam.com, and Fernando's on Hedgeye Risk Management website. Anything else to add, guys, before we close it out?
Well, looking
Been
forward
fun.
to further conversations, guys. Thanks for having me.
Yeah, this has been great, man. All right. Well, best of luck out there. Hopefully we see you for the next one. Thanks.
Thanks, guys.